Okay, we've got people joining. So just going to kick off today's webinar. And as I said, it's called Tokenization in Europe, Unlocking Opportunities with Mika. It's hosted today by DigiShares. And I'll just go through what we'll be doing today. So we'll have opening remarks from Klaus Scanning, CEO of DigiShares. We'll then move on to speaker presentations. We've got a great panel of speakers today, a number of them. So we'll have to get through all of them. And then we'll have panel discussions with all of them with a live Q&A from the audience as well. Okay, so just a quick intro to myself, Mark Mariampillai, CEO of Tokuti and also BD at Valereum, focus on real-world asset structuring, bringing them to market, and then also providing liquidity on the buy side as well. Now, without further ado, we've got a lot to cover, so I want to welcome Klaus to give some opening remarks today. He's CEO of DigiShares. Over to you, Klaus.
Thank you very much, Mark, and thanks for hosting today. Good morning, afternoon, and evening to everyone here, and welcome to the webinar. We have a great turnout today, more than 300 signups. So this shows a growing interest in real-world asset tokenization and the momentum that we are building. Thanks for the speakers for coming today, and hopefully we'll have a very exciting and interesting 2 hours approximately. So as many of you know, we've seen a lot of progress in both the UAE and the US, but Europe is equally important and significant, I would say, in the tokenization space. The EU framework, as you will hear today, is now among the most advanced, and it's also technology neutral, right? So no special regulation or legislation is invented to treat tokenized securities, at least that I'm aware of. So that's a great advantage for Europe. We have clear rules, but no unnecessary new categories just because we use blockchain technology for it. The US is doing the same, but I would say we have a few exceptions. Right? The UAE is not doing the same. They are definitely introducing new regulation. The same is the case in the UK, which is a difficult market for us and for anyone that wants to tokenize. But hopefully we find a way through it. Around 25% of our clients are European, and that share is growing, I would say. So on the technology front, we're working on adding support for asset-backed tokens, which is not a security, but rather a type of commodity-based token. We see a lot of interest for this, or increasing interest for this. So commodities such as gold and silver, but also grain, olives, water, and so on, can be represented by this type of tokens. So it's not directly a utility token, but more like a token that is like a security, so it has some of the same protocol restrictions, but it's not treated as security. So that's coming out of, I think, within the next months. We're also working on order matching technology for our exchange. This will go live, hopefully in South Africa version of the exchange pretty soon, and in the UAE version of realestate.exchange within a year, I would say, when we get the license. We are rolling out Decaux, our decentralized identity framework. We're using that on the exchange in the US. So anyone signing up there will be using it. And clients that sign up with tokenized assets will also have to use it on their platform. So it's slowly getting rolled out. Otherwise, we are extremely active on the global scene, and you can meet us in many places over the next few months. We were at Token 2049 last week in Singapore, working together with Mark and the greater Valereum team. The Valereum is our investor, and we've become part of their ecosystem by now. So we were at the event together with them, sharing a booth. On October 15, we have the next DigiShares Masterclass in the UAE, hosted by our head of business development, Gabriel Sadou. And then on October 22nd, we have an event focused on ESE 7943, the new open and independent standard for real-world asset tokenization. And we'll be speaking, but also other contributors and members of the consortium behind the standard, such as Break-In and Stopebox and so on, will be speaking. So that's quite exciting. We'll also be at Blockchain Live in Dubai end of October. And then we'll be in Miami, November 5 and 6 at the Blockchain Futurist Conference. So we are working on building infrastructure for tokenization, and hopefully we can have make it all come together also on the legal side. We are looking forward to the presentations today, and I will give the word back to Mark. Thank you very much.
Thanks, Klaus. Well, you're up to a lot with DigiShares, and yes, Token 2049 was great. We saw a lot of interest in tokenization, DigiShares, and the wider market. So the context for today's webinar is MiCA, the implementation of the regulation in the EU. Look, it's created a harmonized framework, setting the stage for really unprecedented growth and innovation for digital assets and crypto. What we're seeing really is regulatory clarity come in. This, MiCA essentially provides this. It's a pan-European rulebook and significantly boosts institutional confidence and enables projects, businesses to really scale right across the EU with a single license. We've seen this similar occurrence for other regulations, such as in investment banking, but now this is moving to digital assets. With the momentum we're seeing, and Klaus touched on it on RWAs in Token 2049, we're seeing a real momentum, especially in Europe, of on-chain RWAs gaining significant traction. Asset manager, family offices, various financial institutions are now launching new initiatives. Me and Klaus spoke to a number of real estate developers out there at Token 2049. So it's really coming into hot space. So, okay, so that's the intro. As I said, we've got a lot to cover. It's could be a long session. So without further ado, let's start with the first speaker presentation. We'll have Matthew Nyman and Fiona Henderson from CMS to give a brief couple of minutes presentation, and we'll get into some questions as well for them. All right, over to you guys.
Thanks very much, Mark. Let me know if there's any technical issues in hearing me. You've got a bit of a double act from me and Matt from CMS. So CMS, for those of you that don't know, we're an international law firm. We've got offices all over the place, including a strong European presence and offices in the UK. And we've got a dedicated crypto team that me and Matt are a part of. So I'm Fiona Henderson. I'm a partner at CMS, and I'll kick off. We've been asked, appreciate the kind of focus today is MiCA, but also a comparator in terms of what MiCA provides for as compared UK and as compared other competitors globally. So what we've been asked to set out is a kind of where we are on tokenization from a UK perspective, so that we can then kind of jump off and compare MiCA to the UK in particular. So I'll cover the legal piece, and then I'll hand over to Matt for the kind of regulatory landscape here. So in the UK, recognition of we've got recognition that digital assets constitute property, but we have technology neutral legislation in that regard, partly owing to future-proofing concerns, but notably we don't have any blockchain laws or equivalent as other jurisdictions have adopted. And in our experience, tokenization projects are really at their core digitalization and automation projects that may involve elements of standardization or personalization. And we say to clients, or we talk to other market participants, that really tokenization shouldn't be considered as a business model per se. The kind of successful tokenization products bring an element of value or USP to customers or the market generally. It's accepted that the technology works, so proof of concept projects limited to the use of that technology, won't have a kind of life beyond that. In practice, from a legal perspective in the UK, and we appreciate other jurisdictions use these terms as well, we refer to them broadly being two models for tokenization: native issuance and mirroring. So native issuance, the token is the asset or is the representation of the legal right to the asset, then you've got a native token. an example of this might be, say for shares, you'd have the blockchain operating as the definitive register of members for a company, and the token effectively representing a share certificate. This can be compared with a mirroring issuance, where the token represents an instrument or a digital or traditional asset, and the issuance of the token there can be referred to or seen as the digital twin, or an additional layer to the underlying asset. Again, taking the example of shares, you might have a register of members that's maintained off-chain and represents the ownership, and then the register on the blockchain might simply mirror that for records purposes, or might show beneficial interests in and to those shares that might not be maintained otherwise in the off-chain register. So bearing that in mind, I think from a kind of asset category perspective, debt tends to be straightforward because there's no kind of statutory basis for having to have a register of note holders, and it's contractual in nature, so it makes it easy for these tokenization projects. Assets where there is already an obligation by law to maintain a central register can be more difficult, thinking, for example, real estate, where ownership is recorded on central registries that already exist. In terms of the regulatory perimeter, and Matt will go into more detail, the FCA applies that based on the token's characteristics. So security tokens and e-money tokens are regulated, and exchange tokens and utility tokens are generally not. And this, underscores kind of UK's approach in a principles-based and technology neutral approach, and you're looking at the nature of the tokens itself. And I'll hand over to Matt to give a bit more detail on that.
Thanks, Fiona. So I'll look at the regulatory side. I think maybe one thing to add, Fiona's explained some of the fundamental legal concepts, which are important for people to know. And she's explained it in the UK. In the EU, there isn't a common legal framework. So individual member states will have their own legal framework, some of which will be more similar, some of which will be different. But what the EU does have is a common regulatory framework in the form of MiCA and in the form of MiFID. And then I guess Switzerland, which we've also, we understand is of interest to people. And we'll touch on Switzerland, again, has its own legal and regulatory framework, obviously, because it's not part of the EU. So it's always important to consider both, and everyone focuses on the regulation because I think that is the sort of threshold condition. But then you also then need to consider the kind of legal and contractual side. So there are 3 or 4 topics around regulation that I will touch on briefly, and these have been suggested by our panel. First of all, a sort of regional comparison. So we're looking at Europe, and you can really divide that up on the regulatory side, as I've just said, between the EU and then the UK and Switzerland. There may be some European countries that aren't in the EU that I haven't mentioned, but please don't be upset at that. I'm just looking at the main jurisdictions that people ask us about. So in the EU, everybody, well, most people have heard about MiCA, and MiCA is the Markets in Crypto Assets regulation, which regulates all crypto assets except for NFTs, if they're true NFTs, and security tokens. Now, when we're talking about tokenization, we're generally talking about tokenization of real-world assets, and those real-world assets could be not security. So there could be some kind of real estate, or it could be commodities that Klaus was referring to. Could be gold, could be wine. But in a lot of cases, the real world asset that is being tokenized via a security, right? So if it's real estate, it's a share in a company that owns some real estate. Or if it's a commodity, it is actually some kind of financial instrument that is linked to the value of the commodity. And so when you're looking at real world assets, you have to look at both security tokens and non-security tokens. So in the EU, you've got to look at MiCA for the non-security side, and then you have to look at MiFID, which has been around for years, but MiFID technically covers the security token side, and MiCA does not apply. So that's the EU. In the UK, currently, it's a bit of a similar situation on the security side, which is that the legacy financial services regulation will apply to a security token. But in addition, we have some crypto regulation, which applies if you are conducting exchange or custody activities in the UK. And annoyingly, if you're issuing a token, whether it's a security token or a non-security token, you're probably going to be caught by that one way or another, which requires licensing. And then in Switzerland, the system is different again, and there is a legal basis. I know I'm concentrating on regulation, but there is a strong legal basis under the DLT Act, which, as Fiona mentioned, the UK doesn't have anything on that front. The EU doesn't have anything on that front either, but Switzerland does have a DLT Act, somewhat similar to Liechtenstein, which has the Blockchain Act. And that provides both the legal basis and actually a regulatory basis as well. And so I think the question that we were asked to address is, which is the best place to launch a project? Is it the EU? Is it Switzerland? Or is it the UK? And the answer is, it depends. They're quite different jurisdictions. I think Mark and mentioned the ability to passport across the EU under MiCA. You also have the ability to passport across the EU under MiFID. So that can work for a security token or a non-security token. So if you want to address the European market and you want to have the biggest number of counterparties, then the EU is the biggest market in Europe. However, if you're looking for a place from which to issue, then you would probably not look at the EU as, I think, top one. And then there's another consideration again, which is, who are you marketing to? And if you're marketing to retail, then again, you will need to passport, and EU is the biggest market. But if you're only looking to market and distribute to institutional investors, then you can avoid regulation of that activity if you're careful and if you get good legal advice, in which case it doesn't matter so much where you are issuing from in any of these jurisdictions.
Matt,
So
sorry to jump in. Yeah, we're really close on the hammer, but yeah, I know it flies by. Yeah, but a minute to go if you could
sure.
to wrap up.
Yeah, sorry about that. Fiona and I are replacing one person, so that the time has increased because there's two of us.
No problem.
But I think we're going to have a Q&A at the end. So let me stop there if we're at time, and there'll be hopefully more time at the end, and people can ask what they're interested about on the regulatory front rather than just what we're planning to say. How about that?
Yeah, sure. I mean, there is one or two questions we'll ask before you wrap up, and then we'll come on to the actual panel discussion. But one thing that people may be interested in, look, if you're advising a UK client that's looking to launch an RWA tokenized asset, for instance, in both the EU and the UK, what's the most practical structure today to stay compliant in both markets?
Okay, great. Yeah, well, that's kind of what I was getting at in that last point. So there's a couple
I
of
try to give
different
you an extra minute to cover it up.
Thank you. Thank you. Very good. Very good. You're great moderator. You can come back. So so when you want to launch in both those markets, I guess what you're saying is you want to distribute in both of those markets, right? That's what I'm guessing you mean by that. And again, if you want institutional distribution, then it doesn't matter. You could be pretty, you could be issuing from or selling from anywhere. If you want retail distribution, then you are going to need licensing in both the UK and the EU. And so it's kind of all or nothing. You're not really making a choice between the two, if that makes sense.
Yes, no, totally. And before we move on, and because I did say we're out of time, but just quickly in maybe 30 seconds, with, for instance, Gibraltar, with the new Schengen potential rules coming in, could there be, a golden triangle ticket potentially in the future, passporting rights? Could that be an advantage to UK and EU companies? And I'm only giving you half a minute, and putting you on the spot, but just dropping it in there.
Sure. I think the short answer is yes, because it's not. This is a developing thing, and so hopefully it will lead. And obviously the bigger question is, will there be some kind of cooperation between the EU and the UK generally, right? Without necessarily having a golden triangle. And that's a question not just for tokenized assets, that's a question for finance and generally. But I hope that will lead to some greater harmonization and market opportunities.
Definitely we'll put it out there. Well, thank you very much, the CMS team. I know you jumped on this really quickly, so appreciate you guys coming in to do today's talk, but we'll talk more on the panel. Thanks very much. All right. Okay, so next to Karola from Kassai Law, over to you.
Thank you very much. My name is Karola Kassai, and as you mentioned, I'm the head of Kassai Law. We've been working in technology, that means also in crypto assets, since 2012. So we are pretty old in the space, advising also from a business and legal perspective. And this also means that we've been through the whole evolution of the regulatory framework, from starting from when, I bought Bitcoin and it turned out really well, or the opposite, because I lost my private key and so on. So from this to I want to create an exchange because I believe there's supposed to be a market, what to do then. And then the next stage when, now I'm supposed to do some regulatory compliance of like registering my company. So up until now, MiCA. So it's been a very, very interesting space. And as CMS already outlined a little bit in the legal background, I was thinking to jump a bit back to the business part. If you're thinking about tokenizing or like issuing tokens, then because we always believe that the law is basically the background, so that shouldn't be the driver. The number one question is always like, what do you want to achieve from a business perspective, and whether tokenization should be the best tool for that. And if we come to the conclusion that yes, then what should your token do? So in other words, what rights do you want to attach to it? And after that, we can jump into the how. And a very, very practical take here, which we've seen throughout the years, that even though now we have MiCA, absolutely, it's supposed to bring regulatory clarity. I'm using quotation marks because maybe if we will have time later on, we can jump into why. But unfortunately, in practice, it's not as simple as it's intended to. But anyway, it's still very important that it's elevating non-security tokens into a regulated, like quasi-security space. So in the end, when the dust settles a little bit and all financial authorities gonna know what they have to do, it's gonna make the life much easier for the companies throughout Europe. And we also mentioned passporting before. That's a very important feature, basically, of MiCA. Then it means that it supercharges scalability of your project and company, because it also reduces, if you think about long term, probably you want to grow throughout the EU. And then before MiCA, it was a hell of a lot of struggle to basically comply with all the national texts and laws and frameworks. So now one CASP license automatically covers the European member states. So this reduced the time to market across the EU, and also like the compliance cost on the long run, because on the short run, when you have to comply with MiCA and the regulatory framework and licensing and so on, it's fairly scary from a practical perspective from companies, but on the long term, it's really great. What's still challenging, which also CMS mentioned or touched upon, is that certain areas which are very much connected are still on a national level. For example, a national securities law, or when it comes like property law, for example, if we talk about real world asset tokenizations. And this also means that you have to have like a more thorough scrutiny of the national laws in certain cases. With MiCA now, it's as mentioned, like it's a uniform framework for non-security tokens. But before that, the only question which companies could work with is like, okay, is my token which I intend to issue a security? No, then what? So now that framework is solved, more or less. And when it comes to, I believe that another very important aspect of the regulation here is basically the investor trust. So being lawyers, in this tech space, it's a little bit of ungrateful job, because if we are there, that's the problem. And if we are not there, then that's the problem. So we try to manage and support all perspectives here, of course, because no regulation should block innovation. But if there is no regulation, then the credibility and the investor trust, institutional trust, and so on, it's pretty hard to achieve. So MiCA is also supposed to provide this trust in the whole industry. And I believe, did we get a question here? I'm sorry, it's just the chat showing. So, and as also mentioned, it's still gonna take a little bit of time, but very prosperous, hopefully.
Thank you, Karola. That does a very good overview from your side, especially from the legal perspective. Just going back to...
Oh, and sorry, I have one very important practical,
please.
Because it happens a lot of times with the projects, is that, so what can be very cost efficient is that if you try to map out what you actually want to do as much as possible, again, from a business perspective, because a lot of projects which we work on, there is something what the founders or the companies have in mind, and then they are constantly pivoting as the discussions are going further. And basically, we can end up on a very different project after a couple of months of work together, because the companies don't really know how they should do it, what they should do, what rights to attach, what they want to achieve, and so on, which I mentioned before. And we are still expected to give, you know, estimations, how much does it gonna cost, how much the licensing is gonna cost, for example. But it's very much possible that at the end of this phase, they don't even need the license, or they need a completely different one, and so on. So that would be a very practical point here for you to try to break it down as detailed as possible, from a lot of angles, what you want to do, so that it's easier to squeeze it into a correct regulatory framework.
Karola, thank you very much for going through it. Very, very interesting. From a investor point of view, what's the key areas in MiCA that really protects investors? So, you know, whether that's a retail or highly sophisticated investor in digital assets, crypto, RWAs, how is MiCA going to protect them?
How we should imagine MiCA is that it's basically aiming to give a fair market protection, just as we know the traditional financial markets. And there are several segments. There are the prudential rules, for example, the redemption when it comes to e-money tokens, or that asset reference tokens have to be backed by reserve of assets, or the white paper liability, for example. They cannot be deceiving, or they have to be very, very clear. We have to have, it's basically like a legally binding disclosure. And that's also, you know, if you are misleading or inaccurate or omit some information, then you can have a liability, you will have a liability for it. Or, for example, the market abuse regulations or the supervisory powers themselves, of course. We will see how that's going to work in practice as well, because now we see a very segmented, now again, back to the practicality, because we work all over Europe. So we've met several financial and supervisory authorities. And even though MiCA is a regulation, there is a significant difference in how they approach it. So we will see that part, but anyhow, there is serious consequences of non-compliance.
Okay, great. I mean, I've come from an investment banking world, so I actually remember implementing MiFID II, you know, regulations. Yeah, honestly, it was a nightmare. Hopefully my old program.
And now you can imagine that for companies with much less resources than an investment bank.
Yeah, well, maybe I need to go back into program management and implement the regulations. Yeah, I've done MiFID II for.
There is something for you there.
Don't tell Klaus. But yeah, actually, just going back to that point, it makes sense. Yeah, I remember cost and charges, best execution out of MiFID II. So what we're saying, these types of investor protections that we've seen on European legislations. Anyone can check my LinkedIn profile. I've done it for 10 years. That's why I laugh when I do it. Costs and charges was a pain.
On the other hand, it's also understandable. So, you know, I always try to like change my hat of like being a lawyer and like being an entrepreneur. So I understand really both sides, because this gives the whole industry legitimation. And that's what the industry was striving for. So
Definitely.
now we have to swallow this pill, solve it, and then hope that it's gonna really speed up adoption and everything.
Awesome. So we'll see. Obviously, MiCA being, you know, the new kind of EU regulations. Just one thing before we finish as well on DeFi. You know, obviously it's quite big. You know, in the crypto space, digital asset space. You know, me personally, I use it day in, day out. I'm actually using right now. No, I'm joking. Not while we're on this webinar. Let me just close this Uniswap trade off. But no. So where do you see MiCA actually impacting DeFi protocols? You know, they've been kind of the real gray area of crypto and Web3, and you know, this is where regulations are really trying to drive out. You know, let's just say the people operating on the other side. How do you see it impacting DeFi protocols?
Yes, Mika is deliberately silent on those actually. And I also seen some tendencies where DeFi front end, so like companies try to squeeze it into RTOs within Mika, which is like the reception and transmission of orders on behalf of clients. But that's that's debatable. Let's just say I don't wanna I don't wanna give legal opinion at the very moment. But the question is really good because it's very clear that that Mika as it is now is not sufficient. And what is expected on a longer run is kind of a Mika 2. We will see, of course, but there are certain also like political and regulatory pressure for extensions towards that, which is supposed to be regulated then or like put a much more focus on governance, for example, as a perimeter. And you know, also as the analogy of the OTC, I thought it was very interesting. Before then, I'm sure you've been there back then with MiFID, that you know they also claim the OTC platforms that they are just like bulletin boards or whatsoever, and then the regulators classify them as well as trading venture. So this is like the MiFID ESMA cooperation. So something like that can happen as well, or then we will see how Mika 2 is gonna have a dual framework, for example, because you know real world assets is also not the easiest at the very moment. And not to mention the hybrid tokens or tokens changing characteristic, which we are working with now, because we are always a bit ahead of somehow our project. So now we have to solve the next challenge, which falls outside of Mika.
Okay, well, that was great. Very, very insightful, interesting as well. I'm sure we'll discuss more in the panel. Thanks, Karola.
Thank you.
All right, without further ado, off to Mike Seiler from BRICKMARK. Mike, take it away. I think Mike's just loading up his screen, so just give us a couple of minutes and we should be good to go.
Can you hear me?
We can hear you, Mike, now.
Okay.
All over to you.
So thank you very much for handing over. I just try to keep in the time slots, which I was told is about 6 minutes. I prepared a few slides just from the inside of what we are doing at BRICKMARK X. I feel honored to be on this stage here, and I'm very welcome and looking forward to your challenged questions and so forth. In the slides, I give you some insight about what we are doing, how we are doing. We are focusing on real-world asset tokenization, especially on real estate. And I give you an outlook on how we, at the moment, see the regulatory setup and in which we work for. So just briefly, a few words about myself. Obviously, I was starting at IT, walking through banking, financial markets, and digital transformation. And 8 years from now, I came across blockchain. At that time, I switched from banking to IT back, and I have found the technology revolutionizing. So I was really keeping on that, and I was involved in early stage project here in Switzerland. It was Crowdly Token on the test site, and the idea was really to fund, to have a pool of funds in order to acquire property, to build up and develop real estate. That was the initial idea. After that, I got in contact to the founder of BRICKMARK, obviously a very charismatic person. I will come to that later on. And since 3.5 years now, I work for BRICKMARK, first as a product owner, now as a CEO. So when I come with BRICKMARK, BRICKMARK is a pioneer in real estate tokenization. Some of you remember the landmark project at Bahnhofstrasse 52. I think it's still the biggest commercial project where 130 million was tokenized. That was focusing on debt on a bond. BRICKMARK has its origin in real estate, and the idea was really to build up our own property stock and fractionalize this property stock to sell that to investors. But from 2023 to 2025, there was a strategic shift, especially driven by market demand into BRICKMARK X. BRICKMARK X today is an institutional grade platform for digital asset issuance and distribution, focusing on real estate. And I think what's very important to say is, and now we come to some aspects which Fiona, Matthew, and Karola early on mentioned to you, we are only focusing on institutional level. Institutional level means from an issuer perspective. Issuers, clients are developers, asset managers, large property owners. And from an investor point of view, we focus on professional investors, qualified investors, institutional investors. It's very important. And operation, our activities are not only in Switzerland, where our origin is, we are also operating in Germany, Austria, and early stage in the UK and other parts of Europe, as well as the UAE and other parts of the world. So I think we have kind of an experience in how to deal with these challenges, which we have heard so far. And with our experience, we have now for 6 years, we have set up a platform which consists of 3 very important aspects, which we think is very necessary in order to successfully do this digital assets issuance and distribution. First of all, an all-in-one service, from structuring, from understanding the client's need from a real estate point of view, from the creating of the product, what kind of digital asset it should be, how it's going to set up in a multi-country, multi-regulatory setup, and how to distribute that. It all has to be on a regulated platform and infrastructure, which has flexible enough in order to cover all that aspects which we heard before. And as we are not regulated at the moment, we are strongly dependent on global partners who support us in setup on a project basis, such an infrastructure that we can proceed. But nevertheless, I think what's most important in our business is that we are on eye level with our clients, and that we are going to structure it with the clients as a partner and advise them on the real estate and the digital asset value we can provide. And with that, I'm going to show you the overview of how we're going to do that. But essentially, we are bridging the originators, the issuers, to the investors. If maybe you ask questions, why are clients coming to us? The answer is rather simple. We are faster, cheaper than banks regarding financing and distribution of real estate. We have effective processes and very important institutional grade infrastructure. That is actually the reason why clients come to us. I'll give you an example how we are going to proceed that. Let's assume we have a property from an asset manager owned in Germany worth about 100 million. The financing is 50% equity, 50% debt, and the issuer really wants to take out some equity in order to finance a new project, in order to buy a new development project, to evolve and to increase its business. What we usually propose is a due diligence on the property, on the financing side, but also on the substance of this real estate. Then we are going to propose some kind of an approach. Let's say 20% out of this 50% equity we are going to take out, sell to dedicated investor groups, for instance, in Germany, Switzerland, wherever. And we structure the tokens according to their need, whether it's maybe a security with an interest and so forth. Usually we do that through an SPV structure. And there comes the question where we are going to set up the SPV and where we are going to issue the token and where we are going to distribute that. That's questions which we have heard from Matthias, Fiona, and Karola is very, very important. And because to to have an appropriate answer and a very pragmatic approach, we have a three-phase approach which we try to address that. In the first phase, we work out together with the client the needs which I've described before, and in a collaboration setup with legal experts, we are working out a framework and a setup for this dedicated project, which combines the issuing location, the issuing structure with the investor protection, and the distribution channels of it, whether it needs a prospect, whether it needs other aspects to distribute. And we also need the regulatory operational setup, which is also very important to identify. After we have this milestone, we integrated it on the platform, we integrate and we mint the tokens, we integrate our partners, we mint it, distribute it, and place it. And we look after the whole life cycle of the token, because usually such a security token is some kind of interest or other aspects which have to be maintained. So that's the way how we are going to approach that. It's a case-by-case approach. It's a very, very knowledge-based capabilities which you have to have from a structuring point of view, legal point of view, from a tech, from a distribution point of view, from a market point of view. And I think what our clients value most about services is that we, on early stage, we can tell them whether this product is going to be a success. And if not, we stop the project after phase one. So everybody is sure and certain that such a project is going to be successful.
Mike, we'll have to.
Last thing.
Oh, okay. Yeah,
yes.
Yeah, we'll have to wrap up quite soon just because of timing. But I think you're coming to the end.
Absolutely. That's my last slide. So the question is, and I often refer to security tokens at the moment, and as our setup is completely institutional, and institutional clients, which was mentioned before, require a very stable, robust regulation. We work at the moment under MiFID, like Switzerland. That is what we are at the moment working with, and that is very proved in our project. It's very straightforward. As we are focusing on larger projects, the cost of this approach is rather high, depending on other approaches we may hear afterwards. At the moment, we see MiFID or MiCA for the future, especially from a stable point of view, especially when the land register is going to be on the blockchain and the whole processing is going to be fully integrated and on time. So that is actually our view and how we position ourselves.
Thank you very much, Mike. Very, very interesting. Thanks for doing the presentation as well. On real estate, for instance, tokenized real estate, there's always the big question about liquidity. I think there's always plenty of issuers that we see in this industry coming on chain. But do you see anything happening now? Do you see buy side coming in? Are these tokens becoming more liquid? Is the tokenization of real estate the big game changer essentially for RWAs?
So I think that at the moment, what we are going to see is just we are placing on a private placement basis. We have not really a secondary market at the moment. So that is our approach. We see that the appetite of investors, especially in this market, is growing. But we see also the questions we have about this liquidity. As usually they are real estate experts, they do not really have an issue with that because they know the real estate has a different character than a stock. But what we see is that that secondary market is going to evolve, especially as we now have in Switzerland, BX Digital, that is the new regulated exchange, and they have huge appetite in order to also issue its security token backed by real estate. And we have also had talks already with banks, which they offered market making for that. So I think that everybody is really seeing it's going in the right direction, but I think really materializing that only in about 2, maybe 3 years. And then I think the whole acceleration of this is going to start.
Wow. Okay. That's pretty big. So do you think we get high frequency trading at some point in the future?
I don't know. I personally believe that compared to stocks, real estate has a different, let's say, asset character. If you buy real estate, I think it's more a buy and hold approach, at least for most of the investors, whereas stocks may be also a speculation aspect. So I personally believe that real estate tokens are going to be completely different trading setups, completely different marketing. We also need in future maybe some kind of a rating for that in order to support the acceptance in the investor side on a broader scale.
Oh, great. Awesome. Well, Mike, thank you very much. Look forward to discussing more on the panel later on today. Okay, so we'll move on.
Thank you, Mark.
Oh, no, you're most welcome. All right, so going to move over to Nodar now, and I'm going to try and pronounce and get the surname right. Baghishvili. Hopefully I got that right.
Mostly correct, yeah. You did a good job.
All right, over to you, my friend.
I requested the share rights, so if you could let me share the slides.
Yeah, sure. I think it's good. Kristin, it should be good to share, right?
Hello, everyone. Yeah, it's been a pleasure to participate here. A lot of interesting points from other participants. I'm going to be focusing on a business part, not so much legal, but obviously we have to cover certain aspects. I represent Blockberg Capital, and I'm a CBO there. And what Blockberg Capital does is a regulated investment fund with a mandate, like dual mandate, to issue ordinary securities and digital securities. And I'll explain the premise of what we're doing, meaning we think that currently RWAs are in a state where internet was maybe 25 years ago. Everybody understands that it is something good and something great is going to come out of it, but there are a lot of experimenting happening right now, and not necessarily much tangible results, meaning compared to rest of the economy. So the promised land for RWAs, and we all understand, probably people that are present here have the stats, but how big category can be, but it is actually quite small right now, meaning if we exclude the stable coins from the whole RWA ecosystem, we are left with rather insignificant sums. And the promised land for RWAs is liquidity, which is actually missing right now at high volume, and the scalability of digital assets like transparent, not meme coins, but the instruments that have essence in them. So what we are trying to configure is a framework platform in the business that addresses those two things. How do we achieve scalability and liquidity at a significant scale? So the presentation from Matthew has been really interesting because it absolutely coincides with the premise that we have, meaning that obviously EU is a really interesting market, and UK standalone is also a very interesting market. Today, the situation in terms of operating within those jurisdictions is much better than it was, let's say, 2 years ago, but still a lot of uncertainty and ambiguity, even with MiCA. So there was the question, which is the best jurisdiction to launch from? So we think that the best jurisdiction to launch from currently is for outside EU, to work with the EU enterprise, and you should have a digital security. So currently we are developing digital security tokens that are either mirrored, native, and natives are structured. And it is a pure enterprise to enterprise offering. And also like to refer to legal environment, a lot of sandboxes are also really helpful. So issuance outside the UK using the country specific sandboxes, like UK currently has a tokenized deposit sandbox. I don't know like what it actually will boil down to, but like those are useful things. So to like recap, summarize like our general take on how do we actually get to the liquidity. Like I'm sure that the point of doing RWAs is not just doing RWAs, meaning like somebody is just exciting about like issuing a token. There should be an actual business in it, and it should actually give like one important thing, like you shouldn't tokenize anything just because you can tokenize anything. Like a lot of instruments, a lot of products are better off where they are. Like let's say in many cases, buying tokenized T-bills is worse than actually buying T-bills from your current bank or somebody else. So the value in terms of practicality, speed, cost, new liquidity, cost of capital should be there. So that is also very important utility. So what we believe in is one of the primary issues why RWAs have not reached their potential yet is the categories of the underlying assets. And like obviously it was 2 years ago or like a year and a half ago, there was a lot of ambiguity and uncertainty in terms of what categories of assets you could work with. And it was really clear why everybody started working with real estate, because it was an unregulated category, easy to understand, but like we see it didn't really scale anywhere. So we believe that having regulated securities or financial instruments as a category is the category that has potential. The second thing is the tokenization pillar, meaning one thing is technology, and technology is abundant. Like we have to, and like it's probably gonna get even more abundant and better. And we have to mention the brilliant work DigiShares is doing in providing technology. But technology aside, tokenization also should concern, and in our opinion, it concerns what you get in the token, meaning meaning of the instrument. Like if it is a utility token, a reference token, or some kind of other token, not a security token, then it is difficult for an enterprise to work with it. Like majority of enterprises, like enterprise refers certain way of working, certain way of getting audited, certain way of having to manage your balance sheet. So like having who knows what on your balance sheet is probably not something that a lot of enterprises can do. So obviously getting a security status is not an easy feat, but that's something that we have to do in order to scale the category and actually get to the liquidity that we want to. And third pillar in terms of the scaling that we consider is the ability to distribute. So there are, like, I'm not going to go in particular details, but a lot of funny cases across EU sandboxes where like countrywide and not just countrywide, where you could virtually issue a digital security, but and there was theoretical way you could sell it, but it was so constrained that there was virtually no liquidity in the sales channels that were provided. So creating the framework and the whole three processes in a way that you can actually distribute. And here I'm not getting to DeFi part, but DeFi part, like in solving the DeFi is also important. But even in centralized channels, being able to sell it is very important. So I think like a tier one trilemma is the following: the asset classes, the tokenization and token status, and the distribution channels. So like kind of using whole bunch of jurisdictions, and that's something that you have to do. Like it's not an easy thing, but like that's what gets you to the results. You can compose, and the composability of the solution is very important, and it should get you to a result. And like hopefully, we believe that we're kind of blazing a trail and like setting a best practice example how we issue digital securities, provide them to the enterprise, because we do not believe that scaling RWAs can be done through somebody buying some tokens like for $100 from their phone. Like enterprise needs to be there. Instruments need to be regulated. They need to be securities, and you have to have access to the like proper channels, and not just for primary issuance, but for the secondary issuance as well. So,
and notice, no, sorry,
yeah.
I'm gonna have to give you 1 minute to wrap up.
Sure, yeah, sure. So, one important note, like connecting the two worlds, like the TradFi and DeFi, is very important in our opinion. So, whatever we have to say, we think also it is important to securitize Web3 protocols as well. So that could be a really an enhancing thing for tokenized securities. And in general, we believe that all the categories that can be securitized are important, but like we should probably go with the easy ones that can create volume at scale, and those are financial instruments and like some structured debt, and that's what we are trying to achieve. So that's it on my end, and happy to answer any questions.
Definitely. Well, we've got the panel later on. I'm sure the audience will have some questions there. But just touching on, I think what you covered already there, a big point is the distribution channel, right? Because I think we all know in RWAs, without that layer and without building that distribution layer, plugging in to institutions, we're not going to scale RWAs, right?
Yeah,
that's the key. Buy side liquidity, but buy side liquidity needs that layer built. So it's really good to see what you guys are building. And what do you think the biggest challenges are in designing such a platform, right? Because this simultaneously serves banks, asset managers, potentially DeFi protocols that you touched on, but remaining compliant under MiCA, secure, and you touched on how we scale it. What's the real big challenge doing that?
But I don't think there is like one silver bullet that's like that you can call a biggest challenge. So you need to tackle several things at once. So scale comes from enterprise, and like you need channels to work with the enterprise. So like the distribution channels need to be there. But you cannot work with the enterprise unless you have enterprise grade product. So you need to go through like creation of enterprise grade product, and then you need to be able to distribute to them. And like even though in certain categories buy and hold may be a solution, but creating a secondary market in most cases is crucial. So not just primary liquidity, but creating secondary market as well is important. And like trying to utilize some elements of composability and like utilizing the lending markets is very important. So like considering all of that, I believe that it is solvable currently. So I believe like within next year and a half, we're going to see significant results in the industry.
Great, awesome. Thank you very much, Nodar. Appreciate the presentation as well. Very nice and
Thank you.
Thank you. Okay, all right. Next up is Ricardo Johnson, CEO founder from Oasis. Over to you, Ricardo.
Thank you. I'm just going to request to share my screen quickly. All right, perfect. But yeah, hello everyone. Great presentation so far. It's been very interesting. Just to introduce myself, I'm Ricardo, the founder of Oasis Global. So at Oasis, we're building the world's first global marketplace for luxury resorts. directly on chain. So we're bridging institutional real estate with DeFi liquidity through compliant tokenized ownership. And our vision is to build the world's most exclusive, illiquid assets, the kind that, are held by family offices and sovereign funds, but make them more accessible, tradable, and usable via blockchain. So luxury resort real estate is a $1 trillion market segment within a $326 trillion global market for real estate, but it's completely almost offline. Every cross-border deal, it takes months of legal work, SPV setup, and tax coordination. And once that capital is deployed, it's traditionally locked for years. And there's no single platform where verified investors can efficiently discover, allocate, and manage these assets. So that friction is exactly what tokenization can solve if it's done, with an institutional structure. But when you look at the RWA stack today, it's evolved from stable coins, the liquidity base of the ecosystem, to treasuries, which give institutions their first on-chain yield exposure. Then we saw private credit and private debt emerge, which improves, transparency and efficiency for short-term asset-backed lending. But, as we've seen on the other presentations, these remain financial instruments. They're yield vehicles, but they're not necessarily wealth building assets. So my conviction is that the next frontier is real estate, and more specifically for what I focus on, which is trophy real estate. So this is a $1 trillion luxury resort segment that's illiquid, fragmented, and globally in demand. That's a gap that we fill. So we tokenize, institutional grade real estate into compliant yield-bearing tokens, literally turning the world's most exclusive assets into the next generation of RWAs. So here's how Oasis solves the institutional gap we just discussed. So each resort is structured for an SPV, giving investors direct legal ownership. And then through our platform, qualified investors can deploy capitals into these SPVs within minutes, whereas before it would take months. So this avoids the layers of legal, tax, and jurisdictional friction that normally slows down the cross-border property deals. And then once invested, they receive quarterly distributions in stablecoin through operating income, along with transparent on-chain reporting. But what makes Oasis different is that these aren't just, abstract yield products. They're actually usable tokens. So investors can actually stay in their properties, they can host events in their properties, and also monetize the resorts that they own. So, and then finally, with a secondary marketplace, each tokenized position gains optional liquidity without compromising on compliance. So what you get is a fully institutional framework, real estate stability, token level efficiency, and real world experience, all put together into one single on-chain marketplace. In regards to our infrastructure stack, so we're built, as a compliance-first infrastructure for tokenized real estate. We operate under traditional Reg D and Reg S frameworks for US and global investors, and we're currently in progress for our ADDM licensing to establish a regulated base within Abu Dhabi. So our roadmap also includes Singapore and Switzerland, which will help us align with the MAS, and eventually we'll get to MiCA. But essentially, it gives us a multi-jurisdictional coverage. As I said before, each asset is structured for an SPV, and we mirror those shares on chain with an ERC 1404 token standard. Allows us to embed KYC, whitelist, and transfer restrictions directly into the token logic. In terms of liquidity layer, I know we spoke on that before in other presentations. We're in active discussions with RWA aggregators, which are now popping up, and security marketplaces. So it helps us get compliant token distribution for future liquidity pathways. So each investment is transparent. All data and financial reporting are synchronized between on-chain ledger and off-chain performance metrics. So in short, Oasis combines the regulatory strength, the token level compliance, and scalable infrastructure to bring real assets on chain. In regards to our traction, I've only got 2 slides left, but
no, I actually wasn't jumping. I thought you finished, so please carry on, Ricardo.
Sorry, I'll be quick.
No, go for it. You got time.
We've got a development pipeline with resorts such as, the Four Seasons, Mandarin Oriental. We're currently just over 300 million. We just secured a $20 million institutional mandate for our first resort. We've got 900 plus accredited investors on our wait list. And we've got a team of advisors, and we're currently raising our pre-seed round on 2 million to finalize our licensing and deploy our first portfolio of tokenized real estate. So yeah, I mean, at the moment, we're open to collaborate. So anyone that's building the RWA space, that's protocols, credit pools, token platforms, it'd be great to connect with you. Thank you.
Thanks, Ricardo. That was a great presentation. Interesting on the luxury side. I think you may be one of the few actually focusing on that niche. So, it's good to see everyone else does obviously the whole plethora, but the whole luxury element. So, hey, if I'm nipping down to the West Indies, for instance, or we can tokenize one of the BVIs or another one of the smaller islands out there as well. Okay, so that's pretty cool. Private island tokenized there as well.
Exactly.
Do you think you'd move to any other sort of luxury goods when you kind of scale this platform, or you stick to kind of real estate?
Yeah, so I have been speaking to a supplier of yachts, charter yachts. I think that would be a good product to tokenize for people to have ownership. I'm not as familiar, like my background's in real estate, so I don't have the experience in that industry. But it's something we're definitely looking into.
Okay, awesome. And then you mentioned Abu Dhabi as well. Out in the UAE, they're doing property deeds as well. Is that something you think you'll look at outside of the SPV, which obviously the rest of the market's doing at the moment? Is that something of interest in the future?
Yeah, definitely. I'm not sure when the rest of the world will catch up to what Dubai is doing with the tokenizing the deeds. Personally, I don't think it's necessary, but I think if we want to get retail adoption of tokenization, I think it's definitely going to help.
All right. Well, thanks very much, Ricardo. I'm actually going to go dive in, look at your platform, and see what I can pick up on there as well.
Perfect.
Very interested. Thank you.
Thank you.
Appreciate it. Okay. All right. So we've got Robin up next from Equito app. Robin, all over to you.
Hello. Can you see me well?
Can see and hear you well. Go for it.
Fantastic. Do you have the presentation in front of you?
Yes, we can see it all. Thank you.
Amazing. Thank you so much, Mark, for holding the stage, and thank you to DigiShares and Clases for organizing this webinar. Very nice to see a lot of players moving forward with the tokenization, and I see strong believers. And we have been strong believers in the fact that blockchain will actually help to transform the market. We have been focusing a lot on retail investors, and we believe that tokenization will help to onboard millions of people into the real estate market. I'm Robin Decaux, CEO of Equito app. I wanted to be a real estate investor back in the days when I was younger, and I was facing, like many retail investors, all the problems that people face. First on, you require a lot of capital in order to invest. Now, minimum 80,000 euro is needed as a saving in order to get a loan, borrow your first money, and in order to buy your first asset. Even if you manage to do so, selecting the right asset is something complex, and majority of the first ones will fail to make sure that it become a profitable investment. And last but not least, everybody is trying to invest their money to generate passive income and not having a second job. And with the regards of all the operations that real estate investment is representing, for majority of the people, it ended up in a nightmare. My parents did it themselves with a second house. And I saw that from a profitable investment, it become actually a big hassle that don't end up to be that profitable at the end. So we thought about a solution because we look at the market. The real estate market is huge. Many of you have mentioned it before. Almost 400 trillion euro entire world is the biggest asset class in the world. But what we look at, what actually people can invest into this real estate market, there is trillions of dollars of savings that are sitting in bank accounts, but that cannot be invested into the real estate market because of the characteristic that I mentioned before. Globally, it's at least $3 trillion market opportunity that we are tackling. If we just look at Europe, we are talking about over 200 billion. And only in Spain, when we have started our expansion, we talk about 20 billion. And we decided to build, with the help of DigiShares and other players, a platform that makes tokenized real estate accessible to all. So basically, you can download our app. Within 1 minute, you KYC yourself and can invest in fractions of those properties on the blockchain very easily. I'm a strong believer on blockchain economy and blockchain technology. I bought my first Bitcoin 10 years ago, but I did my thesis on blockchain, and many of you mentioned it before. The two things that were missing for blockchain to have a global adoption was, one, regulation harmonized all around the world, and two, real and proper use case where people can actually build on it. And I do believe that real estate is the most common and useful use case that people can build on with tokenization and RWA, most generally speaking. So with Equito, very easily, in 2 minutes, you can invest using Apple Pay, Google Pay, fiat, and cryptocurrency in the future. We had this back in the days, but the adoption was not that big. So we really focus on making sure that anybody from their preferred payment method can actually invest in those fractions. From 100 euro, you can take part of a real estate asset. You will earn automatically monthly return directly from the app that you can decide to reinvest and compound your interest or send directly to your bank account in order to pay your monthly spending or whatsoever. And as we mentioned, liquidity being one of the major issues of the real estate asset class, we decided to tackle for this problem, and we built a secondary market directly within Equito, which we aim to embed and grow in the future. But we already provided more than 2 million euros in liquidity. At the moment, we have been so far the market maker, where Equito buy back the tokens of anybody who wants to sell, and we resell them. And any investors already see the value of the token that we are reputting on the secondary market. But now we are a regulated platform. We can actually allow peer-to-peer transfer and even connect ourselves to other secondary. So in a very easy way, we can connect investors from anywhere with any income to invest in the property market from just 100 euros. We have built this, and we all talked about it. Blockchain is a utopia. You can do many things, but with this big vision, you need execution. And myself and my co-founder Naji, we have built in the last 4 years a strong team of operators that understand both the technological aspect, the real estate side, the finance side, the legal side, the tax sides, in order to make sure that we can provide to our retail investors that span over 200,000 people, a product that is both safe and understandable for them to grow their wealth. We have a strong board of advisory of people coming from top companies that have scaled businesses, that have managed billions, and that make sure that we are well advised along the way as we are scaling. We have now a team of 30 people and 60 external people that are working with us on a daily basis to make sure that this dream is a reality consistently. And I was telling you about my vision about tokenization, and I do believe that we can empower the world and we can actually make this financial system more inclusive, and making people who don't even have a bank account can jump into the financial market, just downloading Equito app and making sure that the 100 euro they get, they can actually invest them and put them to work. We have grown very fast in the last 2 years. We have focused ourselves in the Spanish market, but the word of mouth has spread us all around the world. We have investors from 70 different countries. Over 200,000 people have joined the adventure of Equito and started to invest with us. I need to update the deck because we already reached 24 million of assets under management within Equito, and we have acquired 110 properties within the last 2 years. We are operating all the properties. We buy, we renovate, and we sell the properties because we are also very conscious on where people put their money. Technology is an answer, and it allows anyone nowadays to invest into those products, but we also care very much about what is the underlying product behind. And we have been focusing on very old assets that will transform into co-living to make sure that we can face a big problem in all the major cities, which is affordable housing. A lot of people cannot live in the big cities. Rent prices have gone to the roof, and we decided to blend both profitability and impact by making sure that the investment of the people is actually helping the community and making sure that now people who couldn't afford living in big cities can actually sharing a place together. We have operational efficiency and tokenization. I think it's a beautiful technology lever that we can all use, but we also build a set of tools from AI to automation to make sure that all the entire real estate operation can be automatized, to make sure that our team can focus on giving value to the client and give away the repetitive task to automated system.
And Robin, you just got a few minutes to wrap up.
I need just one. This commitment that we have done have allowed us to create trust with all our community, and more than 60% of our investors reinvest with us on a monthly basis. And we have been able to facilitate already 2 million on this buyback program. And now we are benefiting from a lot of coverage program from the press that is highlighting our growth and how Spain is also leading tokenization, as Switzerland and as other countries all around the world. And now our next step is to be able to offer our product all around the world. We are opening ourselves to France, UK, and Germany in the coming years, and doing the full roll-up in the next 5 years to all Europe before entering to America and Asia. And we have tokenized already 24 million euro in the last 2 years, and we are on our way to tokenize 1.5 billion euro in the next 5 years. So I want to acknowledge everybody's effort to make sure that this product is making spread, and all the effort of all the partners here to tokenize real estate and create a market that is actually tokenized. But if anyone wants to discover a little bit more about us, I invite you to scan the QR code and then download our app and learn by yourself. It's very easy and at the step of everyone. Thank you so much, and happy to answer any questions.
I'm trying to scan it now. Done. I'm definitely going to download the app. So individuals outside of Spain, I heard, can download this and get into fractionalized. So fractionalized shares or just real estate? Sorry, I missed
real estate. As everybody's focus is really important. We are focusing on residential. I see some players tackling hotels. I find it very interesting. I do believe that anything can be tokenized. Real estate in general, more speaking, I think is the most easy to understand for any retail investor. Yeah. So for now we do residential, and we're opening further in the future ourselves to commercial, hotels, and whatsoever.
Oh, awesome. And how do you keep retail investors engaged on the platform? I heard you talking earlier on about using Apple Pay, for instance, keeping it very simple, go in, plug. I mean, I'm a DeFi degen, but for the layman person on the street, I'm assuming just go into the app, click a few buttons, your card's collected. You know, that's what they want, right? They don't even want to know blockchain is happening underneath. Is that how it is on your app?
And I'm tech savvy too, and I understand the language you're speaking. But I do believe this transition needs to happen through an ease of use. So blockchain, as soon as we have an easy way for people to connect their wallet and make sure that they can be on board on this Web3 journey, I think this adoption will thrive. But how did we make sure that people stay with us and share the app with their peers? It's really through the ease of use. So now anyone without a strong understanding of technology can actually, my grandma, 94 years old, bought her first token. My 18 years old cousin, without any specific knowledge, also did. And I believe that, you know, people are already making an effort to make sure that they can invest and build wealth through real estate. We need to facilitate the way for them. And tokenization is a beautiful way, but we need to build layers to make sure that it's frictionless as possible for all of them, so they can actually, from the decision and the thought process of I'm gonna enter, they can actually do it.
Oh, awesome. Well, thank you very much for giving a presentation. Very, very insightful. Enjoyed that. We've gone through everyone, so that's pretty good. So Kristen, we're going to move on to the panel discussion shortly, but let's just give it a minute break. I'm going to have a quick glass of water. And then we get on. But for the others, all the attendees, I think we've got quite a few people attending today. Let me just check the numbers. Yeah, we've got quite a lot, just under shy of 100. So I think over the next minute or two, if you can just start putting your questions on the Q&A channel there. I think there's two I can see in there. There's one over on the chat channel. You know, please start stacking them up. And then we can go through that with the panel. So like I said, let's take a quick breather, 1 minute, and then I'll be back on. Thank you. and I've just been informed I have missed someone out. So apologies, I was getting too excited because I was very thirsty for some water, and I didn't do it. So I believe Daniel is here as well, and we'll be talking. Daniel,
Yes.
Rand. Apologies. Yeah, no,
I
apologies.
just remind myself.
My fault. And
No
I'm
problem.
gonna
The Thursday
I'm
it's
gonna,
more.
I'm gonna blame it on this water. That I haven't had any water. So I'm gonna go have this bottle and I'm gonna leave it to you. Great.
No problem. Thank you, Klaus, for helping with the blockchain space and organizing this beautiful webinars. It will be really hard to follow up Robin and also the Ricardo, because we have a similar product. I'm founder of Investbay, and in Investbay we are doing also the tokenization of a property. We are concentrating on the recreation property or the holiday property. We have several projects around the globe. We have a few in Spain, we have a Tenerife, we have a Cape Verde, also we have a Czech and Slovak Republic, plus Croatia. Currently, we launch Bali, our first Asian, and we are preparing Oman, Dubai, and so on. We want to give a people possibility to invest across the world, the same way how Equito is doing. We have less clients. We have currently 800 clients, and but we are growing slowly. Today, I didn't prepare any presentation. I want to share with you my experience with MiCA regulation and the MiFID regulation, because the years ago we were preparing our all our paper with a legal team for our MiCA regulation. We want to create the asset reference token, and we've been preparing all the necessary paper for our Czech National Bank to apply for. Also, we're preparing the DORA, which has to be connected. It's a certain rules how you are operating. But when we came to the National Bank, the discussion with the people who was responsible with it, they say, the guys, you are doing basically the financial product, and you have to stay. The MiCA is not for you. Even it's you are on the blockchain, you're still offering the financial product, and even if we will allow you to apply for MiCA regulation, you will have to apply for each of the property separate license. And only possibility how to change the structure, and currently we are working on, it's the changing to MiFID regulation. Currently we are working on changing the structure. Each our property which we are owning will be owning through SPV. We will be creating the stocks to that SPVs. The stocks we are going to the central depository of securities, and which was the first on DLT pilot regime in Europe. And connecting to these stocks, we will creating the tokens, which will be security tokens, and this we will offer to our retail clients. The benefit of this change is that we can also use the financial advisors and current providers of selling these tokens, and I want to share this experience because everybody thought that MiCA will solve everything, but there is lots of product who was waiting for MiCA, and they are not able to get licensing, and this change might be important. It means that my advice is to if you really thinking about the tokenization of property, do your proper research and going with a lawyer to find if the MiFID is not better for you. And this is everything from my side. I cut it out that and make it a little bit shorter.
Well, no, that's my fault, and I've still got some more water to drink. So look,
No problem.
I don't want to cut you too
No
short.
No.
Yeah, so just a thought. I actually heard you mention CSD. Did I hear right? Central Securities Depository?
Yes, Central Security Depository. It's an from a Czech Republic, which is under the Prague exchange, which is owned by the Vienna exchange. They are our partner. We will have a connections to the Central Depository. We will be able to their DLT pilot regime. We will be able to rewrite the stocks internally or online.
Yeah.
And the tokens will be basically the driver. Whenever the tokens move from one customer to another one, we will move also the stocks in the security depository. It means that it's a little bit shift for us. We are creating kind of a bundle together. We are calling mirror token, and it's completely shift after we were waiting for MiCA regulation. I can tell you that was big change for us and big shock, because everybody expecting that the market it will be definitely, if you tokenize real estate, everybody expecting that will be under the MiCA regulation for sure. But our operation, maybe different operation model might work, but our operation model is we have one property, one SPV, one issuing of a kind of a token, and for this reason it's not possible.
Okay, awesome. The reason it caught my eye is that I used to work, CEO of Gibraltar Stock Exchange's blockchain division, and we were building an on-chain CSD. So it's interesting whenever someone talks about CSD, now this was many years ago, a lot of people are skirting the whole CSD element of it. So it's interesting. Definitely come out in another discussion at some point. It's the old traditional route of holding securities. And you're actually doing that for actual security tokens. So that's very interesting. Just going back on the retail angle as well is, how do you onboard new investors to the concept of tokenized assets? Unlike a lot of people on this call today, and we're trying to onboard the next trillion of users. How do you get them on board essentially, and how do you simplify their journey?
I will go a little bit back because there is one advantage. What I say that really, if we will be under the MiFID regulation, we can use the current distribution channels, the financial advisors and so on. If we stay under the MiCA regulation, the financial advisor will have to apply for MiCA regulation as well. And it means that the people really doesn't want to do so for several projects because they already have a standard financial product which can offer to their clients. And currently we've been working through the social media and finding the people this way. And now we can use these financial advisors because we will be MiFID regulated and give us possibility to better distribution channels. Because then they already have a license for it and they can work with it. I can't hear you.
Apologies, on mute. Okay, no, great. Thank you for going through that. And thanks for the presentation today. And apologies again for
No problem. No problem. No problem at all. No problem at all. I just want to say one more thing and congratulations, Ricardo, for great idea about the islands and the big resorts. This is our ultimate goal, obviously, to build the resorts. Maybe we can connect, but we say that we have to start with a small apartments because we really concentrate on the vacation property, usually taking the branded residences only. It means that we are going slow step-by-step process. Yes, and you can visit us on investbay.com if you want to see how we are operating.
Panelists are going to be linking up, syncing up as well. Great. So we're going to move on to the actual panel Q&A. So as I said, I'm going to give it a minute or so, but if anyone's got questions, please put it in that Q&A channel. There is a separate chat channel, so it's going to be, I'll go through both, but if you can, please put it in the Q&A ones. So give us a minute, we'll be back, and then we'll kick off with the Q&A for the panel and any of your live questions as they come in. Okay, give me a minute or so. All right, I'm back now. So we'll start off with a real general question. I mean, today, and this goes out to the whole panel as well. I think everyone's still online. Now, the whole theme today was on Mika. Obviously, we've got a couple of individuals from the UK as well, but just specifically focusing on Mika. I'll throw it out to all the panel, so feel free to jump in now and answer this for anyone. What's the single most significant trend in tokenization that we're seeing in Europe, especially that Mika is now in effect? And don't be shy, anyone. Anyone want to take that one? So are we seeing any trends in tokenization in Europe at the moment?
I can say a couple of things quickly on that.
Sure.
So, yeah, I think these might have been touched on by some of the speakers already. So Mika has not been a panacea. And as I mentioned at the start, security tokenization is outside the scope of Mika entirely, and you're dealing with MiFID. So if we look at this question a bit differently, which is what trends are we seeing in response to regulation, right? I think there's two. One is we see security and real world asset tokenization issuance in Europe, mainly from what we see out of Liechtenstein, which has very good legal and regulatory framework for issuing, including, if it's a security token, a prospectus under the prospectus directive. The Financial Markets Authority there is quite familiar and comfortable with security token prospectus approvals. But then projects are struggling on the distribution front, again, because distribution to retail or frankly anyone who's not going to benefit from an institutional or sort of qualified professional exemption requires license distribution, which independent projects don't have, and there aren't too many licensed intermediaries who are willing to do that. So that's I guess sort of a positive trend in a sense, which is that there are lots of projects issuing, but then they often struggle on distribution. And of course, there's the secondary market, the limitations on secondary market trading, which a couple of people have alluded to. And then the other trend we're seeing is institutional projects which are successful, right? So across the EU, we have seen tokenization by institutions. including of security tokens and bonds and shares. And then even in the UK, we have seen recently the first, CMS has been working with the Investment Association in the UK on tokenization of funds for going on 5 years now. And after that much time, we finally saw the tokenization by Aberdeen of a fund, money market fund, in the UK. And we also have the digital gilt pilot, which is institutional and obviously government-backed initiative. So we're seeing activity kind of at two ends of the spectrum, if you like, the kind of institutional and government end, and then the independent project end. But we're still not seeing a kind of mass market yet. And that is because of MiCA and also because of MiFID, where it's a security token at a high level. Obviously, there are individual laws, as I've said, in individual countries that have to be overcome as well.
Thank you, Matthew. Daniel.
I have an additional question. Thank you. I have an additional question to Matthew. Do you think that basically, if you are talking about the distribution through the EU, we are thinking to using the LTIF model, the European Long Investment Fund, which enables you to offer the products across the Europe. It's based on the current setup under the MiFID, and it kind of alternates the MiCA regulation across the Europe. Do you think that it's good, or are we going the right way, or thinking at least?
Yes, and I think there's a situation in the UK, which is you can tokenize funds. You've been able to tokenize funds for a long time in a compliant manner. The reason it's not being done is because the fund industry as a whole is not interested in doing it. Part of the reason they're not interested in doing it is for commercial reasons. And another part of the reason they're not interested in doing it is that even though it might be technically possible to do it in a compliant way, they don't have the risk appetite or the appetite for the kind of regulatory engagement and the time and the cost that licensing and compliance would take. Again, because it's not obvious what the commercial benefit will be. So I think it's the inertia, essentially, in the fund industry, which has been holding us back. So yeah, these frameworks are great, but we need the impetus, or we need somebody with enough, enough Bitcoin. I think a couple of people here said they bought 10, 15 years ago. So maybe they can cough up and establish a European regulated fund that is prepared to push the boundaries on this.
Thank you.
May I also comment on that regarding, when I recall correctly, what was about the transit tokenization in Europe. It's more an observation which I have. I think what we see in Germany, Switzerland, and other places, I think there are great projects trying to really establish a secondary market through licensing exchanges. We see Warbex in Poland, we see 21X in Germany, we see BX Digital in Switzerland. I think this is a very strong trend now from, I would say, from big projects and also players which are on the market for quite a long time, like SIX in Switzerland. They established SDX 3-4 years ago. It is now a very established, I would say, exchange, especially for primary issuance of bonds in the size of above 100 million. So I think that is a trend which we see at the moment, that the secondary market is starting to, let's say, the infrastructure for secondary market is going to evolve, going to start in the next few months. And I think that's going to support what we aim to do. I mean, a recent announcement from Nasdaq to tokenize all its stocks by 2026 is a very strong commitment. to, I would say, an infrastructure which will be built around on maybe traditional financial instruments, but also able to take up some real-world asset products which we are structuring now. So I think this is a huge trend, maybe not from a tactical or structural tokenization point of view, but try to address really that the secondary market is really the big topic to accelerate the whole thing.
So Mike, on that, and throwing it out to the rest of the guys on secondary markets and liquidity, what actually needs to happen next in Europe because to compliantly doing this. So I would probably say the infrastructure's there, right? So if we need an order book, ATS, CSD, all this stuff exists in terms of the infrastructure. We know people could do peer-to-peer already. And DeFi protocols, GitHub, we can have a Uniswap style DEX. So in Europe, and this is to everyone, not just you, Mike, and not just the lawyers, but what do you think needs to happen next before we actually see this? I know you mentioned SIX have got their exchange, but we're talking about real adoption and highly liquid secondary markets for tokenized assets. Anyone? Do you think well, Mike, you mentioned it was going to happen in the next...
I want to jump in here then
Okay,
for just 1 second, because what we also see on the market is that indeed other panelists talk about it a lot now, that the real estate tokenization is actually booming. So it's extremely a lot of projects just grew out of nowhere last year and over the years now. But there is also a significant, whether it can be called trend or not, that investors are actually a bit reluctant to jump on. So I believe there were several projects which had to be closed down when we cut ourselves through the regulatory hurdles, and the investor interest was not that high. So that can be one thing actually to work on a little bit more, and Mika can help a lot, of course, that this is not something scary or not something hip on the sideline, but this is actually happening.
Cool, thank you, Karola. I just don't want to harp on it, but so for SIX, just for my information, because I don't live in Europe, I live in Dubai. So for SIX exchange at the moment, for the rest of the audience, do we currently have tokenized stocks on SIX or there?
No, you missed the start. Sorry about that. I mean, SIX is the mother company of SDX, Swiss Digital Exchange, which is built up for digital bonds issuing and trading. In parallel to that, Börse Stuttgart has the project, is the owner of BX Digital, which is a Swiss digital exchange. We got licensed just recently, and they're going to issue digital real-world assets on a regulated stock exchange just for that. That is the 2 projects which I mentioned for. And it looks as if 21X, which has somehow related to that, and SWAT, this is, by the way, also a network which tries to, or which issues real-world assets on their infrastructure. They are somehow indications that secondary market projects are now growing, and I would say very traditional infrastructure providers are supporting and funding those projects. That is the trend which I see at the moment. So they are starting to cope and see that the digital world is worth to invest. That is what I mentioned.
Yeah, no, definitely. Thank you very much for that. I can see, Klaus, you've got your hand up as well.
Yeah, quick points. I think that what we've been doing the last 7 years where we've been in business is really to try to educate people to adopt wallets and get into the crypto space in order to invest in tokenized assets, right? And that's going to take a long time. So I think what we are now starting to do, and which Mike is especially a representative of, is to connect the existing distribution rails with the tokenization space. So we're not trying to convert retail investors to get into the space, but rather improving the technology so much that we can just connect it together with existing rails. I think that's going to be more successful and more promising.
Definitely. Thank you, Klaus. And Nodar, I'm going to come to you and just actually got a load of questions pop up in the Q&A. So we're going to go to them afterwards, Nodar, and get
Sure.
through them as well. Thank you.
So I had 2 points that I wanted to mention. One was education and the other one was utility. So Klaus just took one of my points. But I think DigiShares is doing a brilliant job on education, like this call being one example. And the other one is, I think all of the components are like not together, but they are available, meaning like regulation, legal, technology. Like technology obviously has, like all of them have a lot of room for improvement, but very important thing to do is that there's so many opportunities, like what do you actually start doing building, and do you actually provide the utility to the customer, whoever that customer is, whether it is an institution or a retail customer. Like Matthew initially mentioned the UK situation where funds are reluctant to tokenize, deploy the tokenized fund structure, and Karola also said that investors are reluctant to invest. So, okay, one thing is that you give me this cool shiny thing, and like just because of that, I can try to do it, but probably not a lot of people are gonna try to do it unless you provide me with a clear utility the product provides. And I guess the people in the industry need to work really hard. Like we had a lot of solutions, like let's say like generation 1 tokenization projects where yeah, you had to do a proof of concept, you had to do something, but now we actually need to create value where and we're talking about investment. So return on investment, like the meaning is very important and good, but the return on investment has to be good. Like compensability has to be good, access to liquidity has to be good. So I would really stress, like on probably one very important point is the utility of the instruments that each of us is going to be working on and creating. Thank you.
Thanks, Nodar. Right, going to go to some of the audience's questions so we can get them involved because we're running out of time, so I want to make sure. So there is a number of them. I don't think we'll get through all of them, but I'm going to go straight into one of Fabio's questions, going out to everyone on the panel. So he's asking, what are the best practices for onboarding retail investors safely into tokenized property in terms of disclosures, risk ratings, or suitability tests before the first euro is even invested? Anyone want to take that one? Any onboarding? No. So I'll assume no one can answer that. I can move on to the next one. Fabio, we'll try and get you an answer later after the call. But here's another one for Fabio. I think we should be able to answer this one. For founders exploring this space, what's the first 2 legal or regulatory steps you recommend taking before speaking to regulators so we can get the structure right from the start? Another legal question. No?
Unless there are any other lawyers on the call who want to take that, I guess I have to take it. But I'm happy to let someone else speak. Don't want it to be a legal manual. So that's a very big question. What are the legal and regulatory considerations before you speak to regulators? I guess, I mean, there are all sorts of legal and regulatory considerations that we've discussed today, and obviously you want to get advice on them, right? So that's obvious. But you know, what do you need to think about before you speak to a regulator? So if you're speaking to a regulator, it's either because you want to get licensed or you want to get some confirmation that you don't need to be licensed. Regulators are generally better at telling you whether they will or won't give you a license than they are at telling you you don't need one. You know, the kind of no action letters that you get in the US are not common in Europe at all. So you can't assume you're going to get that, and you should assume you're not going to get that. And obviously, if you apply for a license, that's going to take a long time, but it is a good idea to have an informal discussion with the regulator first, and your local lawyer should be able to help you with that. I'm being told that my TV will turn off shortly, so if I disappear, that's why. But then the other thing to say is regulators are not going to give you advice. Unless you are a massive existing regulated company. So if you are, you know, Santander or Barclays, yeah, the regulator will talk to you about this stuff. But if you're a new project, they're not going to give you advice. And so you really need to know the answers before you ask the questions. And so your meeting with the regulator generally just needs to be kind of strategic rather than an exploratory call.
And Matthew, before your TV turns off. Oh,
I can hear you. Can you hear me?
Yeah. Just a quick one before this one's definitely directed towards you. And from Anonymous.
The legal 1 second, I want to jump on that as well to complement what Matthew just said, is that there is actually one practical angle here, which might be worth to consider, is that, you know, one of the big losers, so to say, with MiCA are the countries where also like the regulatory arbitrage hubs. So, for example, Estonia or Malta. And in our experience, those regulators, exactly because of that, are a bit more friendly to discuss. Then, of course, it's another question that from a business strategy perspective, that's supposed to be the member states where you should apply for a license. But it actually differs highly a lot between each member states and their financial supervisory authorities, how they respond to such request.
Thank you, Karola. Just back to Matthew before your TV dies, or maybe it's died already. You still there? All right, one more for you.
Hey, yeah.
You'll be happy. Mr. Anonymous has asked, the legal guidance is relatively sparse in the UK. Where or what do you suggest as a starting point? And I suspect it's a generic question on tokenized RWA's assets.
ChatGPT is a good starting point. But then you'll need to come and speak to a lawyer before you actually make any decisions based on it, because it sometimes usually gets some of it wrong, at least. There is actually quite a bit of information I mentioned on funds from the Investment Association. There's information on real estate and other real world asset tokenization that CMS has published that we've been involved in, as well as the Investment Association work on funds. The FCA does actually have some useful information on this, but I can't think of the top of my head, because generally we're producing this guidance and I'm generally not looking for it, because we're the ones who are being asked for it. So that's the best I can do.
No problem. Thank you very much for that. Robin, we've got a question from Basil specifically to you. What kind of tokens do I get when I invest on your platform? I mean, what does it represent?
Robin had to leave. He's gone.
Oh, okay. We'll get the answer. I mean, Basil, we could give you probably a generic answer, but I don't want to talk for Robin specifically. I actually don't know, Klaus, as well, if it's a ERC or if it's a representation, so I don't want to give off false information. But I'm sure, Basil, we can get you the answer offline, or we'll get some contact details and you can reach out to Robin directly for sure on that. Thank you very much. Just going down, just checking a few more questions before we close out the Q&A. A lot of legal questions. Here's one from Ron. Do each state mandate their own laws? And does the EU registration allow the token to be purchased by the individuals in any one of these states? Another lawyer question. Anyone for that?
The answer there, as Matt kind of alluded to before, is that each state does have its own laws. So the kind of regulatory piece, you've got MiCA or MiFID, but from a kind of recognition of assets and kind of central registration ownership requirements, then that's on a state by state basis. So you would need to consider each member state to the extent the underlying assets are governed by or otherwise situated in the laws of that state.
Thank you very much. Thanks for all the audience questions as well. Before we wrap up, though, I think to the panel, Klaus as well, you'll be well versed with this one. And I think we just talk about real world adoption in general. And I think, on today's panel, we've had a lot of obviously real estate. We had Ricardo talking about kind of luxury and luxury goods and luxury kind of real estate tokenization. Klaus, over to you. There's been a lot about regulation. This seminar's been about MiCA. But what's the most promising real world use case of tokenization you've seen and the panel seen gain genuine traction in the last year or two?
I have to say Equito, right? You heard the presentation. I think they've done an excellent job, right? I think they rival Realty in the US, so they are probably among the top 5 globally doing this stuff.
And in
I
terms
think
of
their colleagues on the call here, I think will agree. They've done a great job.
Definitely, everyone has as well. I'm definitely going to be going and checking some of these apps as well after the call. But in terms of asset class, I guess we all assume or all agree it's real estate. It's the big use case. Would that be fair to say?
Yeah.
Yeah.
I would say so, but it maybe accounts for 75% of what we see among our clients. But there's certainly many other asset classes, but it's fragmented, right? So none of them are of a significant size. I would say maybe the biggest one we see at the moment is sort of commodities all lumped into one group.
Definitely. Private companies, equities, it's all there. It's all happening. Tokenized funds. It's all to come. Well, look, panel, thank you very much for today, coming on the call, taking your time out. I think everyone that attended very well educated on tokenization and what MiCA is bringing actually to Europe. What I want to do is actually invite the panelists to give some closing remarks, brief closing remarks. But what I'll do is, given that I missed that Daniel in between, let's go to Daniel first of all to close up from his side.
Thank you very much, and thank you that you finally invite me. And also once more, thank you, Klaus, for doing great job for entire industry, because his willingness and his work, it's really important. And I hope that this also help everybody from us to building better possibility how to create the tokenization, for example, real estate in our case. Thank you.
Thank you, Daniel. Matthew and Fiona, do you want to give some closing remarks?
Okay, I'll go because it looks like Fiona might have some IT problems. I think we might be the only panelists who haven't sort of set out our stall in terms of what we do. So I'll just say very quickly that CMS I believe is the only global law firm with a dedicated digital assets practice. We work globally, except for in North America. We've been working on tokenization at least since I joined, going on 5 years ago. We work with some of the regulators and institutions that I mentioned, but we also have been working much more with crypto native and independent projects and everyone in between. So please get in touch if there's anything we can do to help you anywhere in Europe. Thank you.
Thanks, Matt. Actually, I might be in touch after this, so we'll speak again. Karola, next up is you.
Yes, thank you very much as well for the event. It's been very interesting and great to be part of it. And as mentioned, and we already touched upon it before, one of my core messages would be that it's really great work what you are guys doing, all of you, because it's a big part of educating the market, because as we established, Mika is here, the industry is here. So I believe just a little more time and then it can actually skyrocket. So thank you for that. And as also mentioned before, it's very, very important to make the world understand the use cases. So very, very exact examples and benefits and success stories so that it can be part of an established industry and the mindset. And that's exactly what guys here are doing. So keep on the good work.
Thank you very much, Karola. Over to you, Mike.
Yeah, well, thank you all. I mean, this expert panel taught me also quite a few interesting lessons, which I will take up and make sure that BRICKMARK is going to support our digital asset ambitions for to make true in the next few years. So thank you very much, panelists and the audience. And yes, let's go on and approach our dreams.
Thank you, Mike. Nodar?
I'll keep it brief. Thank you all. It has been a pleasure. Mark, thanks for great moderation, and Klaus and DigiShares, thank you for organizing. And I wish you all a lot of success and liquidity with RWAs.
I like that. Liquidity, yeah. We're all after that, definitely.
That's all about liquidity. So
yeah, let's talk more after this call for sure. That's the big burning topic for sure. Okay, so Ricardo, over to you.
Yeah, thank you for having me. It's been a great webinar. I've been watching them for the past year or so, and it's probably one of my favorites. Not just because I'm obviously on it, but some good panelists, some good projects out there that I've never heard of before. So definitely going to do some more research in them and connect with the founders involved. But yeah, thank you.
Thanks very much, Ricardo. And I think Robin's left. So Klaus, did you want to give some closing remarks over to you?
Yeah, I also want to thank the speakers and especially you, Mark, for great facilitation. We've been doing these events, these webinars for many years now, actually several years, maybe 5 or 6 years. And I would say the speaker composition has changed over the years. So we now have more actual use cases, I would say actual successful use cases compared to when we started. And we also have real qualified distribution partners such as Mike. But we still have a lot of lawyers. While it's nice to have them here, it's a sign of, it's a symptom of things still being complicated on the legal side. It's less so in the US. I would say the US, it's becoming really, really easy. In the UAE, it's also not becoming easy, but at least it's becoming structured and recognized how to do it as a well-defined path. But in the European Union and in the UK, right, it still differs from country to country to a great degree, and Mika hasn't really solved it. So hopefully we can reach some kind of conclusion over the next few years, so we can so it becomes more routine on the legal side to do our stuff. Thank you everyone for attending today.
Thank you, Klaus. Appreciate it. Yep, and let's sign off today. Again, thank you to everyone, the great panelists, Klaus and the DigiShares team, and Kristin as well in the background, who's been, you know, organizing this to a T. I think, Klaus, before we sign off, I think maybe some of the other topics that come up today could be a good webinar topic. The whole liquidity, buy side distribution there, you know, Nodar touched on it. I think that would be a really good topic to really dive in, you know, at some point in the future.
There will actually very soon be a webinar focused on distribution. I think within the next month.
There we go. I'm going to turn up for that one as well. Looking forward to that one. Okay, great, guys. We'll end it here. There's a recording that Kristin will post the link about. Appreciate it, and we will see you on the next DigiShares webinar. Thanks all.